Hello and welcome to CMC Markets on Tuesday, the 21st of January, and the weekly market update. Normal services resumed after last week's special edition. What are equity markets doing? They're generally maintaining their upward bias, despite a much greater degree of focus on earnings. Earnings are coming somewhat mixed, I have to say. None of the earnings that I've seen so far have really beaten expectations. We've seen a disappointing earnings update this week from the European banking sector, Deutsche Bank specifically. Profits warning a 1.1 billion euro loss. Last week we've seen Citigroup and JP Morgan come out with some fairly mixed figures. Once again, litigation has been at the forefront of some of the misses, as well as lower revenues from fixed income. So the earnings picture at the moment continues to remain, I would suggest, lackluster at best. Having said that, equity markets still remain fairly well underpinned. The FTSE 100 still looks as if it could well retest the highs last year. The DAX continues to make new all-time highs, and the S&P and the Dow Jones still show no signs whatsoever of exhaustion. So what are we going to look at this week? Well, I thought I would focus on the UK this week simply because there's not really that much in the way of economic data to focus on from either Europe or the US. I think the main focus for the US next week will be next week's Fed meeting. But as for this week, we've got unemployment data out of the UK, we've got Bank of England minutes, and we've also got the latest public sector borrowing numbers. So I'm going to start off with a UK gilt chart. I think simply because that really highlights market expectations of potential future rate rises from the Bank of England. And from the end of December, we've seen UK yields slip back from just above the 3% level. We've seen gilt prices actually edge higher. Now, you can argue as to the reasons as to why that's happened. The fact is, UK gilt prices are actually trending higher. Now, is that because of lowered expectations of future rate increases, or is that uncertainty or overall uncertainty about the inflation outlook going forward? Now, last week we saw UK CPI come in at 2%. First time it's hit the Bank of England's target for quite a long time. So I think that could actually feed into slightly lowered inflation expectations and the likelihood that we may not see a rate rise for quite some time to come, because of the potential for a lower rate of inflation going forward. So that sort of brings us on to cable. Now, last week we saw UK retail sales come in at 2.6% for December. Now, that's by far the biggest rise in UK retail sales we've seen in a very long time. And it's altogether the more surprising when you actually look at the retail sales growth throughout 2013 that we've seen in Q1, Q2 and Q3. We've seen a 1% rise in UK retail sales quarter on quarter. So that's a significantly good number at a time when inflation still remains well above average incomes. And that's a real concern, I think, going forward. But what does that mean for UK GDP? Well, it probably means that we're going to get a fairly decent number for Q4, and we'll find out those numbers in a couple of weeks' time. So that brings me on to the UK unemployment data that is due out on Wednesday. Now, there wasn't really much of a gilt market reaction or a sterling reaction to last week's inflation figures. I think simply because the market accepts that we're probably going to average a slightly lower rate of inflation than we've currently been used to. There is also the other fact that the Bank of England is now targeting unemployment as a staging post for when it will consider the next rise in interest rates. And I think the unemployment figures are going to be very key in that regard. There's a good chance that we could see another fall much closer to the 7% staging post in the numbers that come out on Wednesday. At the moment, unemployment is at 7.4%. Given the fact that the previous 2 months that we've seen so far, the 1 month rate has come in at 7.1, there's a very good chance we could see a very sharp fall in Wednesday's numbers to as low as potentially 7.2%. Now, whatever you think about future rate expectations with respect to the Bank of England, that is probably going to have a negative effect on gilt prices and help underpin the pound further. We look at this cable chart, we can see straight away that there's a potential head and shoulders pattern forming on it, with the head at the recent highs at the end of last year, the beginning of this year, around about 166, and two shoulders of price action around about 165.20. But that doesn't necessarily mean that we're in a topping pattern for cable. We're only in a topping pattern if we drop below the neckline, and the neckline is around about 162.20, where that horizontal line through the lows is in December. So it's the December lows that we're targeting for a potential breakout in the pound. If we go back above 165.20, then I think there's a good chance that we could go all the way back to 166. Also on Wednesday, we've got the latest Bank of England minutes, and we've sort of had a little bit of a flavour of that earlier this week when Mr. Broadbent, who's on the MPC, basically outlined that he would like to see a significant convergence between average incomes and inflation. And average incomes is also coming out on Wednesday, and the expectation there for average earnings is for that to rise to around about 1%. Still well below inflation, but going in the right direction. Inflation coming down, average incomes going up. And that needs to continue to happen for the growth that we saw in Q3 to be sustainable into Q4 and into 2014. What that means for the pound, though, should be fairly positive. And that will be reflected in this euro sterling chart that I'm about to show you. Still targeting 81.6070 level. That is a really key chart point. It's a Fibonacci retracement level from the lows at 77.55 to the recent highs that we saw in July, August last year. So 82.30 was the previous lows. If we break below that and sustain a move below that, then the longer term objective for euro sterling remains around about 81.60, 81.70. Okay, so that's pretty much it for this week. Once again, thanks very much for listening. Until same time next week, this is Michael Hewson talking to you from CMC Markets.